Good morning, and thanks so much for tuning into the trade setup. I'm Neeraj Shah. It's the Friday, and we can well do with the week behind us because it's just been that kind of a week listless with a negative bias, a bunch of stocks getting sold into. Uh, let's see how the final day is. First, the global news flow. US is increasing its contingent of troops in Taiwan to train local forces. This US-China strains are really coming to the fore now. In fact, the US Secretary of State Anthony Blinken said that China had almost certainly provided Russia with dual use aid for military and civilian use. Clearly, there's a lot of exchanges out there, and the tensions are coming to the fore. Oil has extended the gain for a second session ahead of the US inflation data. And Asian stocks have eked out gains after a jittery US session, which saw the US markets actually do slightly better than what we've been used to the past few days. So they'll come up on your screen next, and you will see about a 0.5% uptick for the S&P 500, NASDAQ about 0.75%, Dow about a third of a percent. So gains, but it's not that the other indicators really dramatically change too much. Let's bring them up, and you see the 10-year yield at 3.87, 3.88, so just about in the 3.92 mark. S&P VIX was down 5%. In fact, the India VIX too yesterday was a bit lower. The dollar index is flattish at about 104.55. The SGX Nifty, after 5 days of a decline, let's just see what that is indicating in the session today. About a third of a percent at 17,649. So what's the trade setup therefore for the day looking like? I think we should keep in mind that the benchmark Nifty is now declined for 5 consecutive days, and from a technical perspective, you never know, there could be a bounce back. In fact, technical indicators are still bearish, but I think select quant indicators that I look at point to oversold index levels. So don't be surprised if there's a bit of a bounce, and not just by virtue of what Asia is doing, but in general, I think we might just see a bit of a bounce from where we are currently. Doesn't mean that that bounce will not get sold into though. And I think that is where you got to look at the slightly medium-term indicators, slightly medium-term chartists, who, who kind of talk about what will happen over the course of 2 or 3 weeks or 4 weeks, and not just about what might happen in a day or two. But for the day, you probably pay for the pounds. However, the space which you should be very, very mindful of is real estate. That sector is completely out of favor. Technical bounce backs may get sold into. Frankly, if you look at what real estate is doing or has done, is just that bit of uh, how the market loves to hate. I mean, that's what's happening in real estate, to be honest. Almost all stocks are getting sold into. That sector has declined the most in this current expiry gone by. Stocks like macro tech have corrected about 17%. In fact, DLF, which had a positive news flow yesterday or day before too, has corrected about 5% in the last 1 week, if I'm not wrong. So it's not been very happy going, and therefore that's a space that you should be wary of. Now, at the end of the expiry, it's also important to figure out what the FI positioning is, right? So let's try and do that. FI's index futures long short ratio as of yesterday stood at 0.24, which is a significant decrease since the last expiry, which is 25th Jan, which was at 0.61. This indicates bearishness by FIs, right? Obviously, long to short ratio, it's gone down, and therefore it indicates bearishness by FIs. The long positions held by FIs in the index futures decreased by 5,000 contracts since last expiry, but the short positions actually increased by 75,000 contracts. Just shows the bent of the foreign institutional investor. The last 2 days of the expiry have seen heavy short buildup by FIs in index futures, with short contracts increasing by 25,000, while the Nifty declined by almost 2%. The net longs, though, in single stock futures are up. So they are playing long individual stocks, short the index. And that's the game that the FI positioning is at, as analyzed by brokerages. I'm essentially reproducing that. So pretty interesting what's happened. Some of these are from the MK research team and some from others, but this is very interesting, the data that has come up. So FI positioning is definitely short. Bear that in mind. Now, what to do with specific stocks on a day like this? There isn't too much, I must admit, okay, at the start itself. However, let's try and look at some. So Z, it fell by about 3.5% or 3.7% yesterday, with more than 19 times the weekly average volumes. The stock made a low of 176 in the morning trade, but then recovered nearly 12% from the lows. The delivery percentage stood at about 17.38 now. of on a day when the volumes are up about 19 times weekly average, you don't expect delivery volumes to be high, and that's what's happened. But you clearly seen some buying at the lower levels. NSE's left Z out of FNO from what I hear, but the point being, is Z a buy? Because I think it will depend a lot on the action that Z wants to take. Typically, for like Payasini expert explained yesterday, there's a committee of creditors which gets formed, and if that gets formed, then the process takes really long, and then there's a risk of Sony saying that, hey, do we want to wait that long for the merger? But if Z manages to settle it before the committee of creditors gets formed, which is a 30-day period, then things might not be as bad from a merger perspective. The only point is the outstanding claims are not just this 150 crores, as the Prabhudas Girdhar note pointed out yesterday, about 400 crores. Does Z have the muscle to do that? They have cash balance of 650 crores. Now, will they spend that cash balance thinking that, hey, the larger game is the merger with Sony? You would argue that maybe they will, and therefore maybe some bit of buying would have emerged at lower levels. From a valuation perspective, it's not too bad, by the way. Keep that in mind. So interesting to see what happens to Z in the very near term. I would suspect that if an announcement like yesterday's couldn't cause that sustained 12% damage, then maybe, just maybe, uh, there might not be another 12%, 13% downside. But let's wait and watch. Fundamental analysts are positive on the company. Keep that in mind. The merger, of course, remains that big talking point. If it doesn't go through, then it's really bad. Then some other stocks in news. Mahindra Lifespace, Arvind Subramanian, who's the MD and CEO, has resigned with effect from the close of business on May 22nd to pursue personal interest. They've appointed a new CEO as well for a period of 5 years. So they've signaled continuity. Maybe this was all planned and announced now. But the point being, uh, he's done well with Mahindra Lifespace, the way the companies kind of gain uh, size and traction. So maybe, just maybe, there could be a bit of a corrective move today. Who knows? Not a very liquid stock. The other two also not very liquid. Sanofi India, for example, not a very liquid stock. The numbers are a bit mixed. Good numbers on the bottom line front, but both on all top line, EBITDA as well as net profit below what the street was working with. They've given an impressive final dividend and a special dividend, so that could be interesting. But remember, the stock is northwards of 5,000. So this is, I mean, it's not a Herculean large dividend. It's about a 10, 6, 7, 8% dividend, final plus special milake. So bear that in mind. Numbers slightly below estimates. KSB, the numbers slightly above estimates. Actually, not estimates, but just looking okay. The numbers: revenues up 18%, EBITDA up 36%, margins expand, net profit up 42%. Expansion of margins is interesting. 200 basis points on that base is pretty strong. Maybe you have a positive reaction for KSB. Do watch out for that. Hindustan Copper, Hindalco, and Vedanta might be in focus because copper fell the most in 2 months in yesterday's session. The Fed worries are outweighing the supply risks from a shutdown of a major mine in Panama. So, well, maybe these stocks have a negative reaction today. Maybe sugar stocks have a positive reaction because sugar climbed with heavy rains spurring the Brazil harvest concerns. However, these things are failing to have some positive impact on the sugar stocks in the last few days. So I don't know if today will be any different, but fundamentally this should augur well. Though India is not exporting anymore, so in that sense, it doesn't really per se matter, but you like the base commodity being higher as opposed to the base commodity being lower from a trading perspective and a sentiment perspective. So maybe the sugar stocks have a good day today. Not too much in terms of brokerages as well. MK has written a note on Aditya Birla, and I thought that was important. So uh, the MK is saying that they were buy with the target price of 295. The current price is about 231. They said the steep correction was unwarranted. Better margin execution, a potential upside. The lifestyle business maintained industry-leading per EBO recovery of 140% versus 9 months of FY20, which is very strong, really. And that's a 53% of the mix. And innerwear, which is 5% of the mix, is witnessing strong trends. 40% CAGR versus 25% per page over the last 5 years. That's impressive, really. I didn't think of this. I didn't know of this. So quite stunning, really, what they've done on the innerwear, but it's not a very large portion of the mix. The net mood point being MK believes that it's a strong move, it's strong fundamentals for this thing, and therefore the price correction, which has been very steep, is unwarranted. If you believe MK's logic, maybe you might want to look at and study this company. Don't go out buy things just because one brokerage is saying these are the markets which allow you the time to analyze carefully, have patience, and pick and choose in a proper fashion. So nothing's running away, believe me on that. So that's the long and short of the trade setup today. Thank you so much for tuning in, and have a great day ahead, and have a fabulous weekend ahead. I'll see you with the trade setup on Monday, of course, and some conversations, of course, on Talking Point today as well. There's also this ARIA conference that BQ is broadcasting today. We'll hear the whole-time director of SEBI, Anand Narayan, speak about this. One of my favorite speakers, really, and favorite minds in the Indian landscape. So it'll be interesting to hear what he has to say. We'll also have KV Kamath a bit later on at 4:30. It'll be interesting to see what he has to say when it comes to building India for 2030. So some promising conversations today on BQ Prime. Thanks so much for tuning in to the Trade Setup today.